Welcome to the BF Anderson Technical Report for August the 23rd. Let's start out with the put-call ratio. We're starting to see some call buying coming in, which means that optimism is kind of picking up. And if you look at the Fear-Greed Index on the report that's attached, you'll see we've moved back into greed. So, we got into it. We had some put buying going on, somewhat of a minor correction, but now the market is close to making new highs and optimism is creeping in. So we basically have moved back into roughly a neutral area, and not a bad time, but we're not down here, put it that way. I thought we would take a quick look here at what's going on with the Chinese market. You can see continues to be a waterfall breakdown. A little bit of a bounce in here, what I would call a dead cat bounce. China better get going on these trade talks because I think it's really hurting their economy. Not only China, but if you look at the emerging markets overall, again, somewhat of a waterfall decline, getting a short-term bounce here. But the emerging markets are clearly in trouble, and we need to be aware of that. Now, I will point out that as the international markets are looking somewhat weak and troublesome, the U.S. markets are looking fantastic. This is the S&P 600 Small Cap Index. These are the small cap stocks. You can see they're breaking out, hitting all-time new highs. Now, I have to really point out here, I have not seen the small caps outperform in this fashion in quite a long time. I would even say it could go back to around 2003. So this is a very good sign for the U.S. economy because it means that the small companies there's enough confidence in the system that people are willing to invest in the smaller companies. Now, I want to kind of jump into a familiar subject here called human behavior. Market behavior is a subset of human behavior. In other words, humans equal the market. So when you look at the stock market and realize this is an auction process made up of hundreds of millions of individuals making decisions all the time. So you have to really realize that one of the problems with human behavior is that we look backwards. So in other words, let's just take an example here. You're right here, it's 1990, you're getting ready to break out into one of the greatest bull markets in history, and you're looking back. You're looking back at the prior period, and the prior period was incredibly difficult. This was the crash of '87. So what happens with a lot of human behavior is that we just simply say, well, I'm only going to invest in something that has a historic track record of some sort that I'm comfortable with. Well, sometimes it's just not that simple. In fact, if you think about it, this would have been a great time to build a portfolio. This is what I mean. Starting in, say, 1985, you come up with $10,000, you get it into your portfolio. 96, you add another $10,000, then you add another $10,000 annually each year. Let's say by the end of this period, you've got roughly $100,000 built up. And you're not doing particularly well, but you had to stay disciplined and you had to stick with it because once you went from this point to this point, you had well over, $100,000, $1 million. You would have at least made $1 million between this point here and this point here. But you had to have the discipline to sock away the money during this period here. Now, I'm going to tell you personally, this is the same thing. Here we are now. Now, this cycle actually got started around 1996. This box did. And so over this 20-year period, it would have been a fantastic time to have been building a portfolio because what we're trying to point out here is that your brain can be your greatest enemy. Your ego can be your greatest enemy. You have to just realize that you have to look at the charts. You have to look at the numbers, and just get your ego out the way and get on with it. So we have to look at the facts. We have to maintain an open mind. And this could mean, because of this long basing period, and the media right now, and especially recently, has declared this to be the longest bull market in history. I disagree with that. This economic recovery began in '09, but we went back into a new bear market between 2014 and mid-2016. It was about a 2.5-year bear market, which reset the bull market that got started in '09, because the bull market from this point to this point was dominated mainly by toothpaste stocks. But now as we've come out of this particular bear market, it's really being led by small cap growth companies, which is really indicative of a bull market. So in other words, these long periods, like I go back here to this box that broke out in 1983 started in 1966. This box built for 6 years, this box built for 20 years. So in other words, if you go back to 1935, which this graph doesn't go back that far, after 1935, we launched a 15-year bull market. In 1985, which would be right here, we launched a 14-year bull market. And so these bull markets, after these consolidation periods, can last for a really long period of time. So once you realize that this particular breakout that occurred in 2016 is less than 2 years old, and so you have to ask the question, could this uptrend last another 12 to 13 years? Well, it's possible. So I think that we have entered basically another little short-term consolidation period here recently when the market peaked in January, February, and we're just really getting close to breaking out to an all-time new high. Don't be surprised if that doesn't happen. Now let's look at the top 5 just to kind of see our watch list. This is not a buy list. We just want to kind of see which stocks are leading this market. Advanced Micro Devices, which is a large cap semiconductor company. They compete directly with people like Intel. Stock breaking out, hitting an all-time new high. This is Turtle Beach. Now this is a small cap, pretty much one product company that has to do with products for the gaming industry. Now here's a new name on the list that we've seen this stock before. We're aware of it. They went public back in October of last year. This is Roku. Now Roku is like a Netflix, where they provide a streaming device that you attach to your television to get movies and TV shows and so forth. It's replacing cable. I bought a Roku box. I actually had an Amazon Fire TV, and I got rid of it and replaced it with a Roku. It really is a better technology. Square is a stock we own in the portfolio. I own it personally. This is a company that's disrupting the cash register industry. They have devices that go into iPhones, and they actually have iPads that can act like a cash register. The last stock on the list is a company called Wayfair. This is a company that mainly is like an Amazon. They primarily, though, specialize in products for the home, rugs, sinks, faucets. Wayfair is, I've used the service before, and it's fine. So anyway, Wayfair actually making an all-time new high. So if you have any questions, give me a call. Market's looking good. However, we are starting to see a little bit of optimism coming in here, which is not necessarily a bad thing, but let's just see if things get overheated. Let me know if you have any questions. Thank you.